video, let's deep dive into a great compounder for the last 5 to 10 years, Arista Networks. It has a market cap of $91 billion approximately right now. The year-to-date performance is minus 35% with a PE of 33, a forward PE of 29. It's one of the lowest PE ratio we've seen since a few years. So is it worth, first of all, the premiums that we pay on this company? And is it a buy opportunity or no? Do you need to buy the dip? Okay, is it the moment for you to do this? We'll see all of this in this video. Compared to the S&P 500, the performance had been 474% in the last 5 years compared to 104%. So really big outperformance. So in this video, we're going to talk about the business. You will understand everything you need to know about Arista Networks business. You will understand the numbers, if the company have a moat and which moat this company have, the value, at what price it can be interesting to open a position on it, and of course some potential problems that I see in this company and that need to be taken into consideration before buying. So the history of the company started in February 2004. It was founded by Andy Bechtolsheim and David Cherrington, with Jayshree Ullal later joining as a CEO. It was in October 2008. She was working for Cisco during 15 years before joining. And you will see that the history between Cisco and Arista is pretty wild because a lot of people working for Arista were previously working for Cisco. It's the 6th June 2014, it's the IPO, okay, on the New York Stock Exchange under the ticker symbol ANET with a share price at $43. In August 2016, Cisco filed patent lawsuits against Arista, leading to significant legal battles that impacted the stock until settlement were reached in 2018. In November 2nd, 2017, they announced the acquisition of Metamako, expanding their low latency networking capabilities for financial services. And February 19, 2019, it's the acquisition of Mojo Networks, making Arista's entry into the cloud-managed Wi-Fi market. How do they earn money? So Arista Networks is networking equipment providers that primarily sell Ethernet switches and software to data center. The Ethernet one here is very important because they're really working to make Ethernet a norm. So if Ethernet is a norm for the network switch and so on, it will be very profitable for Arista. A bit like USB and USB-C is a norm for connectivity, okay? Here is what they are trying to do with Ethernet. Its marquee product is Extensible Operating System, or EOS, that runs a single image across every single one of its devices. The firm operates as one reportable segment. It has steadily gained market share since its founding in 2004 with a focus on high-speed applications. Arista counts Microsoft and Meta platforms as its largest customer and derives roughly 3/4 of its sales from North America. So the two segments where they earn money, the first one is product, with a 61% gross margin and 29% cumulative annual growth rate for the last 10 years. So that's why it compounded well, and that's why we have a company that totally outperforms the market. So the networking hardware, it's switching and routing platforms that incorporate Arista's core EOS, so Extensible Operating System software. They sell as well some accessories like cable optic, but the main thing is like the networking hardware. The second part is the service, okay, with an 81% gross margin and 39% cumulative annual growth rate for the last 10 years. It's post-contract support, okay, PCS. So it includes technical support, hardware repair, and replacement parts beyond the standard warranty, bug fixes, patches, and unspecified software upgrades provided and when, if available, basis. So you have 84% of the revenue coming from product, 16% from service. I think it's one of the biggest opportunity for Arista to manage to grow the service area. Investing now in Arista with only 16% in service can be great, because if they manage to make service like 30%, and you saw service has 81% gross margin, it will continue to increase their margin plus the profitability. So that's what I like with this company, is that the fact that the service area is not well developed, and the EOS, okay, which is the extensible operating system, which is something that creates a big moat to Arista compared to all the other company in this field. They could manage, I don't know how, but to maybe potentially make recurring revenue out of it. For now, not really. So there is a lot of ways that they can earn more money. Who are the clients? Main one will be cloud networks, large-scale data centers like cloud titans, service providers, large enterprises, because they want high performance, okay, up to 800 gigabyte Ethernet switches and routers. Here the name of the products that they would have would be the 7000 series, especially mentioning leaf spine and universal spine architecture like 7050X, 7060X, 7280R. Like I will not read all of them, but you get it. Which all of them are optimized for scalability, performance, and available needed in large data center. They are one of the only ones that are really optimized for scalability, and they are as well open source. Okay. They also have EOS software provide programmability automation, which is crucial for managing a large and complex network. The advantage, for example, with EOS is that you don't need to shut the system down to do an upgrade in the software. Also, you can connect everything. You don't need, for example, with Cisco, you need to have the last switch to be able to have the last version of their operating system. So it can always change with your need and so on, and you need to change all the switches, all the network. With Arista, you don't need to do this because they have this EOS, and this EOS is really a great innovation and something that put a big value for Arista. They have as well Cloud Vision, which offers centralized management, orchestration, and automation across the network. Cloud EOS enable multi-cloud networking and connectivity, AI networking, high-performance Ethernet solutions, specifically targeting AI workload and clusters. That's what those big cloud network, big scaler, big titans will want, what service they're focusing on. Also, you have enterprise campus network, okay, education, healthcare. This is a new segment that is arriving, and they try to gain market share here. They will need cognitive campus networking architecture, including fixed PoE switches for wired connectivity, connective Wi-Fi solutions, okay, acquired via Mojo network, including Wi-Fi 6 access points managed via Cloud Vision for wireless campus needs. Cloud Vision provides unified management for both wired and wireless campus networks, extending operational consistency for the data center. And Device Analyzer within Cloud Vision help manage the proliferation of IoT device on campus network. So that's what the service that will need those enterprise campus networks. You also have every low latency environments like financial services, media, streaming, and so on. FPGA enabled network solution, okay, so it was acquired via Metamako. So you can see that the acquisitions that they did, it created a good synergy in the company. So it was smart acquisition. Also specific switches series like 7130 or 7150 families are sometimes associated with low latency requirement. And you start to have also some government agency, some enterprises, okay, a growing focus area across a wide spectrum of industry, including media and entertainment, healthcare, oil and gas, education, manufacturing, and industrial sectors. The sales by country, you can see 81% from USA, 10% from Europe, Middle East, Africa, Asia 8%, America 1%. You can see that it's a market which is growing. They expect to have a market which will be 70 billion, so an accessible market. The total accessible market will be potentially 70 billion, what is 41 billion now, so it could almost double in the next 4 years for Arista, 3 years now for Arista. They have been gaining a lot of market shares in dollar as well in SharePort against Cisco. Now they become bigger than Cisco, okay, for the high-speed data center switching market. So this is something good. You can see that the big decline of Cisco and the big share gain from Arista. The overall market is expected to grow approximately by 12% per year till 2030. In the competition, the main competitor now is Cisco system because they have massive install base and enterprise relationship. They are mostly like a big threat for the enterprise area, okay? They have product portfolio spanning the entire network stack. They are strong in campus networking, where Arista is still building a presence, and have a comprehensive security integration, greater service capability, and global support infrastructure. They are still the dominant networking vendor by revenue, especially in traditional enterprise. You also have a serious one, which is Juniper Networks. They are a strong AI-driven enterprise portfolio with Mist acquisition, gaining momentum in data centers, advanced automation capabilities, strong in service provider routing, where Arista is expanding, AI-driven network management, considered superior by some analysts. So it's a serious one. And particularly competitive in the automation and operations simplification space. You also have Nvidia, following the Mellanox acquisition. They have dominant in AI infrastructure with end-to-end solutions, including networking. They control both GPU and networking components critical for AI clusters, deep expertise in InfiniBand for high-performance computing. They have potential to leverage AI leadership to expand networking market share as AI become more critical. So Nvidia, for me, it's one of the main threats. Okay, they can be a big threat for Arista to fight for some market shares. You also have Broadcom, which controls silicon that powers many networking devices, including some of Arista's, with VMware acquisition, potential to create more integrated solution, merchant silicon provider with considerable pricing power. Upstream component supplier become more vertically integrated. You have Dell VMware, okay? So VMware been acquired, a growing networking portfolio with strong server storage integration, can offer complete data centers solution with deep server market penetration, leveraging server dominance to expand networking footprint. And you also have Huawei, price competitive with growing technological capabilities, vertically integrated with own silicon, aggressive pricing in the market, where they operate freely, limited in Western market due to security concern, but dominant in other. Huawei in Asia, they really dominate the Asia area. And the good things that they have Huawei, while they also don't have, is that they have the integration with their own silicon, which is something very important, because if there is a shortage or problem with provider and so on, Huawei will be less impacted. And Huawei is a very serious one, but Huawei is mostly on the east side of the world, and the western side it's where, and you can see Arista makes most of his money from the United States. Here you can compare the gross profit margin from Arista Network, Juniper Network, and Cisco. You can see that on top you have Cisco and Arista Network. Juniper is low. Juniper is really decreasing, while Cisco is flat and increasing a little. Arista Network is decreasing a bit, now increasing back again a little. But yeah, the Juniper Network really decreased. The gross profit margin really decreased. I think the main reason for this is Arista as well as Juniper, they don't have the cost advantage that could have Cisco. Cisco is so big that when they will make an order, it will be so big that they will decrease highly the cost of their product and so on. While for Arista Network and Juniper, they are not at this point yet, so it can be problematic, but it's fine. They still have incredible gross margin. Like Arista is kind of the same than Cisco, so it's fine. But here, it's where it's getting interesting. It's the operating margin. You can see an increasing operating margin for Arista Network, which is almost double than for Cisco and almost quadruple than for Juniper. So this is a very, very good sign. It shows that they're building some strong moat, some strong competitive advantages. For Cisco, it's flat, all the time flat, okay, since the last 20 years, while for Arista, it's growing, and we like seeing operating margins growing. And the return on invested capital, you have Arista Network, which is totally higher than everybody, 5 times to 10 times higher than the competition, than those two competitors, so it's really good. In the team, you have Jayshree Ulal, which is CEO since 2008, and she was working for Cisco for 15 years before joining, and Chantel Breithaupt, which is CFO since 2024 and was working as well for Cisco before. A nice thing that I like to see in the owners is that Andreas Bechtolsheim is still owning roughly 14.5% of the company, which is very good. And the CEO, Jayshree Ullal, is holding approximately 3% of the company, very good as well. For the numbers, we have a revenue growing by 28% for the last 10 years, a cumulative annual growth rate, and the last growth was 19%. EPS, 39% cumulative annual growth rate. It's because they still deliver some shares, they still have some dilution, okay? The higher share outstanding every year, but the margin are increasing, so the profitability is increasing. The last growth of the EPS was 34%, and the free cash flow is growing by 30% per year since the last 10 years. Very good. We have a 5 out of 5 predictability score, which is great. And in the future, the revenue is planned to grow for the next 3 years by 19% per year, EPS by 16% per year for the next 3 years, and free cash flow by almost 10% per year for the next 3 years. So it gives us an overall score of 96.6%, so almost perfect. Efficiency, overall score of 98%. Same, operating margin extremely high, higher than 15%, higher than 20%, like they are 42% now, and growing. Return on invested capital, same, it's growing and over 57% now. And return on asset is growing and over 20% now, so very good. That gives us a 98%. The debt is 100% because they literally have no debt, so this is amazing. And the capital allocation, they don't do buybacks. Unfortunately, you get some dilution, 1% dilution last year. The capex is kind of low, it's very low, like 0.9% of the operating cash flow is spent in capex. And stock-based compensation, they are decreasing it, but it's still a bit high, okay, especially 5 years ago, but they are decreasing it, they're working on it. So let's hope they will start doing some buybacks soon, but that's why you have a 75% score in allocation. So you have an overall quality score at 90%, sorry, you can even put it at 95%. If you compare some score with Juniper and Cisco, you can see that Arista is very high score, while Cisco and Juniper not really good. The strength of the company is there is a technology leadership and innovation. Okay, Arista possesses strong technology, particularly its EOS, which is described as modern, programmable, modular, and reliable. The single binary image across platforms allow for rapid feature deployment. They pioneer software-driven cloud networking and have innovated in areas like high-speed Ethernet, AI networking, visibility, and automation. This is maybe one of the biggest moat for this company, and this is where they are good. They have a really good tech compared to competitors. They have a strong position in cloud data and center market, a leader in the high-speed data center switching market, particularly serving large cloud providers, the cloud titans or hyperscalers, like Microsoft and Meta platform, which represent a significant portion of their revenue. You have a software-driven approach, with EOS and Cloud Vision. The core differentiation team for EOS and the Cloud Vision management platform, enabling automation, programmability, analytics, and operational consistency across data center, campus, and multi-cloud environments. This provides a lower total cost of ownership for customer. And this is something that they really love, especially for Cloud Titan and hyperscaler. It's a product which is well designed for them because they want to be able to modulate it, to program it the way they want, to add applications, their own application on it. And this is possible with Arista Networks because of their EOS, because of their Cloud Vision, and also because of the fact that they are open source. It's one of the only one open source here, and the open source of all of this make it very, very nice for this kind of customers that they want, those particular like the hyperscalers and the cloud titans. They have strong financial performance. Okay, you've seen the balance sheet, income statement, low debt. Like this is really, really good, especially when you compare to other companies. And they have substantial cash equivalent, and marketable securities. They have an experienced management and engineering team. Okay. The leadership team consists of networking industry veterans with deep expertise, highlighted by the background of key executives like the CEO and the founders. The weakness for the company is a high customer concentration. This is probably one of the main ones. A significant portion of the revenue from limited numbers of large customers, specifically Microsoft, 20%, Meta Platform, 40% of the revenue. Both of them cumulated is 34% of the revenue, making results sensitive to the spending cycle, demand pattern, and potential shift in strategy. You have the reliance on a third-party manufacturing. Arista outsources all manufacturing, reducing control over the process, quality assurance, costs, and product supply timing. This exposes them to risk of if manufacturers like Jabil, Sanmina face disruption, capacity constraint, or quality issues. The dependence on key limited component supplier, these products rely on components, specifically American silicon chips, from a limited number of suppliers, including sole source like Broadcom or Intel. Shortages, delays, price increases, or discontinued component can disrupt production, delay product launches like 400 giga optics, and impact margins. You have the complexity and managing supply chain and inventory, balancing sufficient inventory for competitive lead time against the risk of excess obsolete inventory, especially with long lead time components and shifting customer demand priority, is complex and has led to increased inventory level and write-downs. Visibility into future demand is often limited. A less established presence in newer market, while expanding, Arista has more limited operation history and potentially lower market awareness share in adjacent markets like enterprise campus, Wi-Fi, and security compared to their core data center switching market. Selling it to these markets can have longer scale sales cycles. Also, the competition with larger entrenched player risk from acquisition, face intense competition from significantly larger companies like Cisco, Nvidia, Juniper, with greater resource, broader portfolios, larger sales forces, establish a relationship, and potentially their own silicon capabilities. Weakness, again, you still have the niche product portfolio, limited diversification compared to Cisco broad telecom enterprise offerings. Geographic gaps, underpenetrated in emerging markets like Asia Pacific, where Cisco and Huawei dominate. Scale disadvantage, Arista remains smaller than key competitors like Cisco and Juniper, which can limit economy of scale in manufacturing and global support infrastructure. And geographic revenue concentration. The company derives a disproportionate share of revenue from North America markets, creating exposure to regional economic shift. When it comes to the opportunities, you have a continued cloud growth and adoption. The ongoing shift on workload to public, private, and hybrid clouds continues to drive demand for high-performance data center networking. And this is somewhere where Arista is well positioned and the clients like them for this. They also have the artificial intelligence, AI networking. Rapid growth of AI ML workloads create a significant opportunity for high-performance, low-latency Ethernet networking solutions, with Arista positioning its high-speed switches 400 giga, 800G, and beyond for these demanding environments. Enterprise and campus market expansion, significant opportunity exists to gain share in the large enterprise data center and campus, wired and wireless networking markets, leveraging EOS and Cloud Vision for operational consistency. New product cycle, 400G, 800G, and beyond. The transition to higher Ethernet speed creates upgrade cycles and opportunity to sell newer, higher performance platform across all customers segments. Leveraging software and services, expanding the adoption of Cloud Vision, Cloud EOS, DANZ, security application, and PCS provide opportunity for higher margin software service revenue and deeper customer integration. They could go for all of this to a subscription model, and this could increase the margin and maybe be a good area to growth for the future. Also, the networking security integration, as networking and security continue to converge, Arista can expand its security functionality to address growing customer demands for integrated solutions. Multi-cloud networking solution, as enterprise adopt hybrid and multi-cloud strategies, Arista's Cloud Vision platform can address the need for consistent networking across environments. The threats that they're facing, of course, you have macroeconomic and geopolitical uncertainty. This is, you have it everywhere. It's potentially everything on the market having this problem. The supply chain disruption and component availability, concerning risk of shortage, extended lead time, price increases, or quality issue for key component, especially merchant silicon optic. It's something that they really need to work on, this merchant silicon and so on, because the components, the silicon components and everything, because you have a big threat that can come from this. So if there is a shortage, a problem with this, I think it can totally destroy the share price, and it may be the moment where people will need to invest in Arista. If this happens, maybe they will cover this problem way before it happens. Also, you have an intense competition, like you have the white box arriving on the market. You have Cisco, which is like doing huge discount just to gain a client, because they know that if the client stay, it will stay for long. So this is a big competition. The intellectual property litigation, okay, you can have some more dispute, more litigation, okay, that can damage royalties, injection, time consuming. You can have some cost from this. Cisco may continue to try to fight them because they're getting all the best employees from Cisco. So we can have this problem. Of course, cybersecurity risk, okay, breach of Arista's own system or vulnerability in its product could lead to data loss, reputational damage, liability, regulatory fine, and loss of customer trust. And the technological disruption, shift to wireless, wireline convergence, or open source networking cloud challenge legacy hardware. So let's talk about the product overall, okay? Are they essential? Okay, yes, especially for companies that need high performance switches. Are the sales predictable? Is there any regularity? So it will be yes and no. Yes, because some of the revenue as well from, they have some revenue come from services, okay? And they have good retention on them, but they face, like, the hardware need to be sold, and the hardware may face some less predictability and regularity. Is it a wide market with tons of clients? Yes. Even if now Arista is a bit concentrated, even if they are focused on hyperscalers and you don't have a lot of them, but they're trying to open into a wider market. So it will be yes and no. Okay, yes, maybe it's a bit too strong. It's yes and no. Is it difficult for client to change to competitor? No. Okay, it's not difficult, but with what they did, yes. Because contrary to Cisco or others, when you use Arista product, you can change easily. That's the main thing. That's why people sign with Arista a lot of time, is because they know that, okay, if we did a mistake by going with Arista, we can change easily. While if we did a mistake with Cisco or Juniper, we cannot change easily. We are fucked and we need to change everything. It will cost us a shit ton of money. While with Arista, is not the case. But the product and software are so much better that finally you don't change. So they gain client because on the paper it's easy to change when you use Arista, but then you realize that they are way better, so you don't want to change. So on the paper it's easy for the client to change, but in the fact they don't do it because Arista is better. As a product resilient to change and innovation? No. If a big innovation comes, you may lose market if you cannot adapt. As a position, as a market leader? Yes, in some segment. Is the market open or closed? Can competitor enter easily? Depend which part of the market. It's getting open with you have more and more white boxes, okay, white label and so on. So this can create like a market more open, but it's not that open than this. Are they price maker? Yes, their prices are higher than Cisco, Juniper. Doesn't mean that they're fully price maker, but they have an advantage here because their technology is better. Is it easy to forecast growth? Yes and no. It depends on the global market condition and hyperscalers capex. If tomorrow the hyperscalers reduce their capex, it may be a bit more difficult. Are they dependent on geopolitics? Not more than other companies. Is it easy to find new clients? No. Even if they have good reputation, the competition is intense, but it seems easier for Arista than Juniper or Cisco, as you could see the gain in market shares lately. The management. Does the growth come from outside or inside? Mostly from inside, thanks to amazing products. But they did as well some acquisition which were great. Okay, we cannot like decrease the impact of this. The acquisition have been very good. Is it easy to manage a company? Yes, and they don't have a lot of capex. So if you're good to sell the product and continue to keep the product good, it should be good. Is the company focusing on creating good product? Yes, it's their main goal. As an important team member good? Yes. Now let's talk about the moat. Morningstar rating here, it's a wide moat with a positive trend. You cannot have better, so it's great. The efficiency. You have high and growing operating margins and return on invested capital, which is good. Do they have a switching cost moat? Yes, thanks to the EOS and the quality of product, even though it's technically easier to change from Arista to Cisco because you don't need to replace everything. The quality of the product makes them that people don't want to leave. The pricing power, also the fact for the switching costs that they are open source, so they can build on it. So while when you have a big company building a lot on it, they don't want to change after because they build everything here. Do they have a pricing power? Yes, a little, especially in the high-speed switches. Do they have good intangible asset? Yes, very strong with EOS, which is an open source software that allows companies to build on their own apps. Efficient scale, maybe yes in the high-end market, but not really like generally. Do they have a cost advantage? It seems that it's an area that they need to work on. Do they have a network effect? Not really, but could be soon thanks to the development of the EOS and Cloud Vision. So before getting to valuation, here are some question problems that I think we need to understand, that we need to answer before considering investing in this company. The first one is the customer concentration. Meta represents 14% of revenue and Microsoft 20%. It could represent a problem if they decrease their capex and if Arista doesn't find new big clients. So they are working with new big clients. There is Oracle that have been signed and so on, but it's something to consider. The Asian market seems pretty locked by Huawei, so it may be difficult to enter in this market. Nvidia seems to become a bigger and bigger competitor, taken very seriously. I don't like that they keep diluting shareholders while not having a huge capex. It's to finance stock-based compensation, but I don't really like this thing. Okay, this is a concern that I could have about this company, and I think it's important to present. The guidance, they generally respect their guidance and most of the time do a bit better than expected. They plan to continue to go by 20%, like 19%. But for the history, I checked like during the last few years and every time their guidance were respected and eventually a bit higher all the time. So let's talk about value. The share price now is around $75 with a 10-year median PE of 39, an actual PE of 33, forward PE of 29. The expected revenue growth rate would be 19% per year for the next 3 to 5 years, and the expected EPS growth rate around 16% per year. So with this, let's be conservative for the next 5 years, okay? We'll take a net income growth rate. So the revenue is expected to grow by 19% per year. So let's say the net income will grow by 14% per year. We'll take some margin of safety. They will continue to dilute shareholders. Let's say they do it by 0.5%. Okay, they do by 1%. We can even put 1%. Like they will dilute shareholder by 1% per year. No dividends. The price ratio in 5 years will be 26. So note here that the average, the median was 39, the average was 41. Okay, so to put 26, we expect them to decrease this. Why put 26? Because I don't like to put something over 30 for a company. In my opinion, a P ratio of higher than 30 for a company can be very tricky, and you may get trapped with this. So I always want to put in my calculation to go under. Okay, so I will put 26 in my view. So with all of this, if you want to do 13% per year with this company, you need to buy a $60, almost $61. Okay, if you buy at this price that they have now, you will do approximately 9% per year if this scenario happens. If this scenario don't happen, okay? If, let's say you have better, you have, instead of 14, you have 16% net income growth, okay? You still have 1% share, 1% growth rate of the shares. And here's the price ratio. You go closer to the median, which is 39. Let's say you stay at 33. Now it's 33, you stay at 33, okay? The fair value will be $84. And you will have a cumulative annual growth rate of 16% if you buy now. So it may be an opportunity if you think that this will happen. I prefer to be very conservative when I analyze, when I do things. So that's why I do these numbers. I am aware they are very conservative, but for me, I will consider buying the company around $60, $65. Okay, so that gives us a quality score of 90% and a value score of 50%. We may go a bit at 60%, but I prefer to be very conservative with value, especially that now the market are pretty overvalued. Okay, the market are historically high, so I prefer to take more margin of safety during this kind of periods. To conclude, I really like the business, okay, they have great numbers, the team is very, very good, they're growing, insider are still holding a significant part of the company, okay, they still own, like the co-founders still own around 15%, the CEO 3%, so there is still a big presence in this, and I like this. In my opinion, they can manage the competition and continue to expand their moats. They are on my watch list for now, okay, the price is still a bit high. I don't like paying a huge premium for a company, even with great number. I will consider buying probably around $60 per share. It's where I'm trying to buy. I had an opportunity last week to buy it around $60 per share. It went down, but unfortunately I couldn't buy because I didn't have some cash on hand. My cash was still on the transfer to Interactive Brokers, so I couldn't buy. But this is the price that I aim to enter a position here. It's a company that I would like to have in my portfolio because it's a great compounder. So let me know in the comment section, what do you think about Arista Networks? Do you have it in your portfolio? What is the price that you're looking for to buy it? I will be very happy to read about all of this. So let me know this in the comment section, and I will see you in another analysis. Bye bye.